it's not it's not the stocks that should be leading the market. This market's very different. This market is it's had the same leadership for years, and the leadership is the largest cap stocks. This has been a very tough market to kill, and so it'll be interesting to see if that's what happens here. I'm betting.
So let's just go down the line for the fun of it. I mean, just because the holidays are near, and why not?
Sure.
Bitcoin goes to 150 or 50. Next, more likely 150 or 50.
50.
Really, more likely 50 than 150.
Yes.
And Tesla more likely 250 or 750. Or
250.
Whatever. Okay.
That's the easiest one.
So all these numbers are going to go south on me. Anything I put in front of you, I'll run.
Not really.
Would be Google.
Yeah. All the
quantum.
All the big seven.
Obvious,
all the big seven are going to go south.
Sell them.
Yep.
Sell them. And crypto, sell it.
Yes. But
do you have more conviction on your pessimism for crypto in the Mag 7 than you do optimism for the bond market, or is that indecipherable?
Ooh, that's a really good question. I'm going to say more pessimism for crypto than bullish optimism in bonds. But I don't separate the two by that much.
Okay. And then what about the Mag 7? A degree of pessimism versus optimism in the bond.
Just one notch below crypto.
Okay. So crypto, forget about it. This is madness.
Listen, I like crypto. I just think it's madness. Yeah.
Right. No, you're a crypto believer. You're a crypto subscriber.
Yeah.
You're a user. You're an entrepreneur.
I'm a user. I'm a junkie. I'm an investor.
You butter your toast with it.
Yes.
But it doesn't mean that you will pay $100,000 for it.
Yes. I'm all in.
But just not at this price.
Yeah, exactly.
Okay. And is it fair to attribute the holiday optimism that abounds, which, by the way, in your red sweatshirt with your red studio, you look like yourself, very festive, I will say.
I am very festive today.
I feel like you could be handing out candy canes or treats for the people if you wanted to be from that posture. But do you think Donald Trump deserves the credit for this sentiment of glory and prosperity that abounds in our fine nation?
Why? Is he president?
He's the president-elect. We don't need your wisecracks, pal.
Oh, because I got confused for a second. No, he doesn't deserve any credit. In fact, he's going to get credit for the upcoming for the upcoming crash or sell-off.
It's his inauguration will mark the peak.
Yeah, I think that's a pretty good. That's what I'd be betting on. That the inauguration is going to be kind of the top. But no, he'll get credit for the sell-off. I don't think he'll get credit for the rally. Can
you give Elon Musk credit for the rally? I mean, put it this way: there's a consensus. The thing that I found fascinating personally is that there's a consensus around negative. People are very favorable to reduced government regulation.
Oh, I'm favorable to reduce government regulation.
I'm sure you are.
Sure.
I'm sure you are.
Sure.
And so the Trump presidency, the apparent inbound Trump presidency, has rhetorically, and I emphasize rhetorically because who knows from policy, but has rhetorically opened up a domain of consensus where almost everyone agrees. No one's in favor of more government. I don't know too many people in favor of excessive government regulation or bureaucratic administrative overreach.
Yeah, sure. Agreed.
And I feel like a lot of the rally right now is a function of optimism that that permits will fly more freely, that money will fly more freely, that that bureaucratic encumbrance will be less. I'm skeptical that will actually happen, by the way, but I'm just saying that the rhetorical component of Musk's priority, the reason I think the market is doing so well is because I believe the market has internalized this belief that there's actually going to be diminished bureaucracy and expediting.
Hasn't every Republican platform in the last 40 years been run on reduced regulation?
Yes.
Okay. And hasn't every crash that we've seen in the market's been under a Republican administration, starting with Reagan, going to Bush?
Unequivocally,
Okay.
yes. You don't have to. We don't need your citations.
No. I'm just pointing out facts. I mean, your argument is reduced regulation is leading to this rally, and my argument is
no. My argument is the rhetoric of reduced regulation is more compelling than average this time because of the character of Trump and Musk, and that the cast of characters that the messengers this time are more charismatic and as such are more persuasive.
Yeah, I don't think that's the case. I mean, maybe to their own base, but I think that the rest of the world views them as, as borderline criminals living in. I mean, I'm much more fearful for a lot of things that I wouldn't have been fearful for example, under Bush or Reagan, things like that. Like the future of democracy, things like that. Bribe scandals.
But the market doesn't seem concerned about that. I mean, the market's as concerned about the future of democracy as it is my aliens. Doesn't care.
My point is the markets don't do well in this environment because you have to be careful that there's always a greed factor. And what happens is the euphoria turns to greed and the greed turns to ugly. And so you got to be careful. You have to check, everybody needs to check themselves for a bit. We're all in favor of less regulation, but we're not in favor of the extremes of less regulation.
Of course. And I don't want to even get caught in a political quagmire. Why do you believe that there's so much optimism?
Well, I think that in 2024, looking forward, the moves have been extreme for the last number of years, and I think we've flooded a lot of liquidity into the world, into the marketplace, between the Fed and central banks over the last couple of decades, and I just feel like we have there's a lot of cash, and we have relatively low interest rates. So we have an environment where people are seeking returns, and speculative returns have paid for quite a long time. There's no reason for people that have been speculating from the long side for the last 2 decades to change course, because there's nothing out there that suggests that they should do anything but be optimistic. So I completely understand.
Did you know that the buyers of Fartcoin are outperforming most of the hedge fund managers on Wall Street?
Okay, so what does that mean to you?
It means that the less you know and the more willing you are to buy a meaningless object, the better you perform, which one would theoretically suggest is evidence of a frothy or of irrational exuberance, to use a Greenspanian throwback.
So that's exactly my point. If Fartcoin is so good, which maybe it is, then there's your speculative environment, and why would you change anything until you keep doing it until it doesn't work anymore?
Until Fartcoin goes to zero.
Why should you buy bonds or notes here? You should be buying Fartcoin. There you go. Whatever you want. I mean, buy any coin you want. Until it doesn't work.
Let me try this a different way. Because as you know, when I was at Bloomberg, we used to write the story and then we'd sort of wait to see what the market does.
You should buy the Hawk Tour Girls coin. Buy her coin, the Hawk coin.
Well, we try to put me off on that. You're garbage, man. Don't be putting that bad mojo on me.
She's got your name written all over. She's got your name written all over her. The Hawk Tour Girls got your coin.
You buy it. I'm waiting for the alien girls. I'm going to be waiting for one of those green girls. Come down from Mars, my holiday date. How about this for an argument? How about this? I can do you better. The techno-utopia is upon us for the first time. Full self-driving cars, AI as a layer of life in every object, whatever you want to call it. Spatial data, sort of augmented reality, I guess would be the way I would put it. And the Mag 7 will lead the way, and that it's a rational bifurcation, that this is bigger than the railroads, bigger than electricity, bigger than the invention of this is bigger than that got to rise out of you. This is bigger than the invention of electricity.
Okay, so you think this tech movement is bigger than than
I'm saying the fundamentals that underlie the optimism is well-founded because it is big. The underlying fundamentals is bigger than the invention of electricity.
Yeah, I'm trying to think about that for a second. Yeah, I'm gonna say no. I'm not there yet.
I think it was Michael Saylor, who I realize is easily sort of criticized, but his comment was that everybody says you don't want to buy Manhattan real estate because it's always at a record, until the next year when it's at another record and another record and another record, because it is Manhattan real estate.
Yeah, that is exactly
Why is that also not true for the Mag 7 and Bitcoin?
Yeah, and that's exactly how Michael Saylor thinks. And he has got a lot of people to think that way. The difference is, it remains to be seen if there is a commodity or a technology that acts the same way. The question is, do you put Bitcoin into the same camp that you would put, let's say, NVIDIA or something, or Google, or do you put it in the same camp that you would put gold or silver?
Fifth Avenue real estate, which is where he puts it.
All right, Fifth Avenue real estate, right, whatever. I just question whether those are the same thing. I don't think they are. I think it's closer to a commodity like gold or silver or soybeans than it is, or crude oil, than it is anything else. Even though it's a tech-based commodity, that's what I think.
Which implies what? What does that mean? Let's assume you're right. If it's a commodity,
that implies that it's going to be a two-sided market, and it's going to have some sharp sell-offs.
That it's prone to behave like natural gas or crude oil.
Exactly.
Where it can be 50 or 100 on a given weekend. That it basically has a 50% range. You think Bitcoin has a 50% range up and down?
Yeah, and there's a couple other things. The other thing with Bitcoin that scares me from Michael Saylor's perspective is he is the buyer. It's his marketplace. Everybody else is just playing along. And so, in order to make Bitcoin go higher, you need billion-dollar buyers. He is your billion-dollar buyer. So then the question becomes, when the money flow runs out, what the hell happens?
Are you? I'm not. You're not. But are you suggesting that what you're suggesting? I don't want to say it, but you're suggesting that he needs a never-ending flow of new buyers.
I'm suggesting that he's running a very sophisticated Ponzi scheme, of which
I didn't want to say that.
I'm suggesting that he's running a very sophisticated Ponzi scheme, where he is. I've written extensively about this. Why would anybody invest in Michael Saylor when you can just buy Bitcoin at 1/3 the price outright? It doesn't make any sense to me, other than for some reason you feel like it's limited risk, or that he can continue to push prices significantly higher, so you're adding to it. I just don't understand why anybody would.
You're saying with the MicroStrategy stock, forget his rhetoric. You're saying, why would you participate in his securities?
Exactly.
That you're saying the sophisticated Ponzi is his securities,
yeah,
not his propaganda.
No. He can
his propaganda on Bitcoin.
No, of course not.
The MicroStrategy itself is a racket.
Of course, he can talk all he wants about. He can talk till he's blue in the face about how great Bitcoin is. I couldn't care less. What I'm saying is, why would Dylan Ratigan loan him money at 0.75%, so that he can buy Bitcoin at 3 times the price that the net asset value of his fund, of his stock? It makes no sense. I don't get any of it, but I'm an idiot, obviously, because stock's, going up a lot.
But it goes back to the thing that I'm fascinated about at this moment, and we'll see, because I think we'll look back on this. I can remember a few years ago talking to you about Apple when it was going cuckoo bananas during the pandemic at one point, and you were making a bunch of points. And I feel like we're at one of these moments where like we're at sort of maximum optimism. I mean, to your point, statistically, we are at maximum optimism, but even forget statistically, ambiently, rhetorically, in terms of sense, the Fed is cutting rates at the same time that markets are on records, at the same time that crypto is on records, at the same time that the Mag 7 is this, at the same time there's enough available information to make a case for techno-utopia. True or false doesn't matter. There's enough available information, flying cars, full self-driving, etc. And 100% of the time, something bad happens, historically.
Yeah, the problem is timing. When does that something bad happen?
That's where I'm going.
Yeah, I mean, something bad, something bad's going to happen, all right. The question is, when is that something bad going to happen?
And no one knows, not even the mighty Tom Sosnoff. But Tom Sosnoff, as one of the world's great risk manager, is humble enough to know that he doesn't know, which is why we like to talk to you and hear from you.
I'm humble enough to know that
you're willing to come.
Nobody knows.
Yeah, you're like, not only do I not know, but anybody who says they know for sure doesn't know. Nobody knows.
Exactly.
But what I do know, as the mighty Soz, is how to manage my risk over time such that when that horrible thing happens, which 100% chance it will happen, I'll benefit from that. And in the process of being exposed to that, I won't lose all my money waiting.
Okay, it's fair.
No, it's not fair. How is that done is the question. How do you maintain a pessimistic exposure when you're getting steamrolled by Tesla, you're getting steamrolled by whatever? You just keep putting it on and keep and walk me through how you can continue to endure being incorrect.
Well,
long enough that when you're correct, it pays off.
In the trader world, there's a lot of stuff going on. You're not tied to, you're not. Hopefully, you're not in one instrument. You're not making a single bet. On any given day, half the stocks I follow are down even on an up day, and on an up day, half the stocks we follow are down on an up day and up on a down day. So I'm not so sure I agree with that. Obviously
that it's not so fragile as waiting for a single outcome, even if it's the big outcome.
Not if you're a trader. If you're a pure passive player, sure. If you're just a one-dimensional bet, of course. But if you're kind of all over the place, it's part of our philosophy. Just you got to be everywhere, and yeah. So I don't actually ever think that way.
Which way?
I don't ever think
how to hang in there long enough to be right. You're saying I've got 100 things on. Eventually, this thing will be right.
I believe that the key to success is longevity. I've had this discussion with you many times. I believe the key to success is longevity. And one of the things that I've taught myself to do over the years is to survive. So, the longer you can hang around, the more successful you're going to be. Because I don't believe that one person knows more than anybody else, especially with markets. Somebody can be smarter than somebody else, but I really don't believe that one person has any idea more than a random person next to them of what's going to happen next. So the key for me is to be consistent in the sense that if you're going to be a contrarian, always be a contrarian. You can't mix and match. And B, hang around long enough to be right. For Warren Buffett, that was 40 years. For me, maybe it's 6 months or a year. I don't know. But hang around long enough to be right.
And the only way that's done is with your little positions, on a proportional basis. Obviously.
Yeah, I have some pretty big positions, but on a proportional basis, I mix and match and move them all around.
Mm-hmm. When there's this much optimism, can I ever tell you to just get long calls or puts just because it's so vols in, everybody's so delighted? Just go out there and buy yourself some Tesla puts and see what happens.
Yeah, sure. I could be talked into certain things. I don't really do that, but yeah. I mean, I shorted.
But in a situation like this,
I mean, I shorted.
Try to talk me.
I shorted some stock today. I just bought some futures, and bonds and notes, and so I trade the underlyings a lot.
Okay. And do you ever find yourself openly optimistic, just sort of jolly in the not in the, I know you're a jolly man by your personality, but I'm saying in terms of your sentiment to the financial markets, do you ever get caught in it and think to yourself, you know what?
I absolutely.
Maybe I'm not a contrarian today.
I absolutely get caught up, and I don't want to think I'm not really an emotional trader, but I do get caught up in markets. And so, yeah, the answer to your question is, yeah, I do.
Whether it's optimism or pessimism. So are you feeling more optimistic? Do you feel optimistic about the economy, about your business, about your portfolio, about we've got a Fed rate cut today? I mean, are you drinking the crazy sauce of the current mania on Wall Street and in the U.S. economy?
I feel really, remember, I'm in a business that likes volatility more so that it cares about the market, particularly like or
sentiment.
Yeah, we're a front end. We built a business around implied volatility, and if the markets are busy and implied volatility is up, it doesn't matter if the market goes up or down. I mean, I would say that for most brokerage firms or most financial service firms, you definitely would rather have a bull market because most people carry long bias in their portfolios. Tasty is very different. And in the Tasty world, we don't necessarily have this giant long bias. So we're okay with whatever happens to the market, as long as it's busy.
I got you. I have an interesting discussion I was having earlier today on Twitter with a Tasty trader. Went like this. I was talking with you and with Vecchio and Batista and Ilya the other day about the doubling of Tesla's stock price since the election and the implications of corruption in the U.S. government, such that if a CEO is friends with the incoming president, that it's so valuable for that company that it can double in value, even if it's a massive company at its outset.
Sure.
Anyway, you're familiar with the conversation. And a Tasty trader started asserting a point of view to me in a very well-spoken and articulate manner.
Sure.
And his assertion was the following. Tesla has been diminished for 4 years by government corruption in the Biden administration, preventing Tesla from commercial glory because they're a target.
Yeah.
And again, obviously, to get it, you can kind of have any opinion you want. So the reason I bring it up is because I said, okay, let's assume you're right. Either way, the relationship between the president and a company is so corrupt that either it can hold a company back to a massive degree or propel a company to a massive degree. But either way, it suggests that at the highest level with the biggest companies, there's nothing. Tasty Trade may be a free market.
Yeah, sure.
Or Joe's,
sure.
Crab cakes or whatever.
Yeah,
all the obvious things.
Yeah.
But when you get into big business, whether it's cars, healthcare, all the things, that it is no different than the government of Russia or China or whoever else, where the government dictates.
That is a very typical argument that you would make if you actually knew that you were wrong. That's not an argument.
You're saying that the one that was the Tasty trader, they're saying, well, what about the Biden administration?
Yeah, that's an idiotic argument because Elon Musk did not write the Biden administration. $250 million or $225 million in checks. And that's so it's a completely different. If he had written
red herring.
If he had written $225 million in checks to the Biden administration, and that would have been a different story, but he didn't. And so, it all kind of, there's a lot of interesting things. Money does some interesting things in politics, and you know that quite well. And I think it's all on display now. And, you could say what you want about the Biden administration, but stock markets are record highs, and jobs are unemployment's at record lows, and they didn't take $200 million and $100 million from this billionaire, $200 million from this billionaire. Okay, that didn't happen. So, whatever.
No, but I guess my point is, do you think big business competes on product and service?
Yeah, sure.
Tasty Trade to survive has to facilitate the trades and answer the customer calls.
Sure.
It's a never-ending list, right?
Yeah.
Or any business.
Yeah.
At the highest level, it's not clear that Tesla is twice as valuable today as it was a month ago.
Yeah, I agree.
Yet the stock market has determined it to be twice as valuable today as it was a month ago.
Yep.
The only possible reason for that is because they believe the government has the ability to materially change the economic future of large businesses, which is obviously true.
Okay. Assume all that's true. Now what?
So now your big thing, which I agree with, is market integrity in the United States.
Yeah.
What is the future of market integrity in a world where proximity to the president dictates the future of big business?
That is, you have just hit on what the biggest risk to all this is. You have just hit on, this is the whole point we have been making in the last couple of weeks about markets. The reason that we have companies that are worth $3 and $4 trillion, we have companies now, worth almost $4 trillion. We have multiple companies, 3 or 4 companies, 3 companies worth over 3 trillion, like 3 companies worth over 2 trillion, and a bunch of companies worth over 1 trillion. The reason that our market center can support that our market structure can support that, is because we have something that nobody else in the world has. It's called market integrity. And with market integrity comes liquidity. And with liquidity comes massive amounts of across-the-board efficiency into the multiple tens of trillions of dollars. It's probably hundreds of trillions of dollars right now total. All of that is a byproduct of, or a derivative of, market integrity, market structure, market integrity. As soon as that integrity walks out the door, because you can buy it. I could give a rat's ass about Elon giving Trump $200 million. I really don't care. That's not the risk. People go, it's $200 million. Who cares? You're right. Nobody cares. The difference is, if you can buy a couple of $100 billion for $200 million.
I think it's like 800 billion, I think it is.
Whatever it is, it's an arb. It's an arb for anybody. And then what happens is, basically, market integrity is for sale. Then you don't have these giant pools of liquidity. Then you don't have a market center to anybody else. Then you're just another corrupt nation. And that's the biggest issue. That's what's on the table here.
I totally agree, which is why I bring it up. I mean, the reason I bring this up all the time, or I have been for the past few days, is for this exact reason.
Yeah, well, that's what's on the table right now. That's what the challenge is. That's what concerns us.
Like, it's one thing if you want to point your buddies to be goofy cabinet ministers, or if you want to hang out with Elon Musk. It's another thing if you shit in the pond that fuels all counterparty, all capital, all global liquidity so that you can sit on a golden toilet for a couple weeks.
Yeah, listen, nobody here, people that hate Trump, okay, nobody cares if he appoints Herschel Walker to be an ambassador to the Bahamas, okay, or Kimberly Guilfoyle to be ambassador.
She's going to Greece. She's got to go. She's got to go.
Or to be the ambassador to Greece. Nobody cares, or if he wants to appoint his father and brother-in-laws, whatever, blah, 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 to somebody else. I could care less.
You're going to put the Fox News guys in charge of the Pentagon.
I almost don't even care about that, because you know what? I completely understand that as president,
the loyalty thing. You gave me a good lesson in this.
As president, that you've earned the right to put your friends in those places, because last time he tried it based on qualifications that didn't work. So this time he's trying it based on loyalty. I get that. I'm actually okay with it. I don't love it, but I'm okay with it. It's market integrity that's the only thing that really scares me, because that's where everything else falls apart. And that's not sustainable, because the problem with market integrity is when you lose it, then the rats turn on each other. Then everything, as long as things are going good, everybody's fine. As soon as things turn sour, all the rats eat each other, and it gets ugly. And that's the biggest risk out there. And all of a sudden, that puts a lot of risk on the stuff that we do, because, I don't want to see 80% VIX. I don't want to see 50% VIX. There was a time going back to 2008 when the market was crashing at the end of the end of 2008, which you remember well. The middle of a financial crisis, the shit hits the fan, everybody's going ballistic, everything. Talk about market integrity, there was none. And it was a little bit scary, because, it's one thing to say, it's one thing to watch some firms, fall apart. It's another thing to see Bear Stearns crumble, Lehman Brothers crumble, all that kind of stuff. That was a little scary.
Greenberg's getting 2 cents a share, all the things.
Yeah, everything that was happening was incredibly scary. And so we get to that point in the year, and I remember, our firm, just like it is today, our firm then, our customers were just traders. So we didn't have any of that long bias risk. We had risk, but it was all measurable. So our firm never had any risk. Every other firm, E-Trade, Schwab, even TD Ameritrade, every firm had risk. Their money funds were trading under $1. Their real estate portfolios were imploding. Goldman Sachs was down to nothing. It was ugly. Citigroup was down to $1. There was Merrill Lynch was $3 or $4 at the time. Bank of America got down to $6. I mean, it was just really all out ugly. And I remember thinking, this is what market integrity looks like. This is like the collapse of a very corrupt system, different kind of corruption than today. But this is the collapse. This is what happens when market integrity falls apart. This is when you could buy a $5 million house for, $600,000.
And an $80 million airplane for $4 million.
Exactly. It's a different kind of corruption, a different kind of market integrity, but this is what happens when it all falls apart. And I remember thinking to myself, okay, I can't believe that there's a chance that one of these crappy ass firms is somehow going to hurt us. Like I didn't know, how do we protect ourselves from a counterparty going down? I seriously, that was the one thing that, I'm looking at our stuff, we're like, we don't have any risk unless what if OCC, what if somebody takes OCC down?
What if they don't pay on the other side, whatever it is? Sure.
Yeah. What if there's a counterparty that doesn't make the trades? I didn't exactly know what could happen, but
the commercial paper market was breaking, for God's. The dollar wasn't even $1 for a minute there.
Yeah, the central clearing system, what happens if it didn't, there was things that made me nervous, things that were outside of our control that made me nervous. And that's what 60, 70, 80% volatility will do when market integrity falls apart. I don't think Trump understands market integrity. I think it's outside of his scope. And I think that, everybody's looking at this market right now going, hey, yeah, there's no risk. It's normal for a stock to go from 250 to 500, 6 weeks after election.
Not just forget. I mean, but so I guess we're going to wrap it up. But I'm assuming your sense, you and I will agree that the table stakes of the Trump presidency are the future of market integrity.
Yes. Yeah. I mean, there are definitely social concerns for a lot of people, of course, but I don't feel like that is truly Trump's agenda. So that doesn't concern me that much. I feel that that's just, that's more of a platform agenda, not his personal agenda. I don't think that worries me as much. And I don't think his picks, things like that worry me. I really think it's about market integrity. And I think that's the risk that people are not, when they look at Elon, they best buddy type thing, first buddy type thing. That's the thing that scares me.
And what America has going for it, which is what saved America in 2008 and 9, is that even in the face of a total collapse of market integrity, the market recovered simply because there was no other market with more integrity at the time.
Yeah. And what ultimately happens when, let's go back to the Bitcoin discussion. This whole thing works out great with MicroStrategies and everything else. And until what if Bitcoin goes to 50,000? And then at that point,
as any commodity does, to your point earlier.
Yeah,
over time.
And then what happens when the net asset value goes? The net asset value goes down not by 50%, but goes down by 90%. And then all of the leveraged Bitcoin funds that track that, that either leverage to MicroStrategies or leverage to Bitcoin, all of those funds go basically out of business. It's not going to take a big move. Bitcoin drops. I think I saw the statistics somewhere. Bitcoin drops $40,000, I think, and basically, MicroStrategies
clears the floor.
MicroStrategies can go down basically 80% if it trades under net asset value, which it easily could do.
Mm-hmm.
So that I just don't think people grasp the magnitude of market integrity, and sometimes when things get ahead of themselves, it's a scary
and specifically how much market integrity is at risk right now. All jokes aside about this or that or the first buddy or whatever, like you're playing with the most important asset on earth, and it's not a toy.
Yeah, our economy functions around our market structure. Like, people don't get that. I shouldn't say people don't get that. I think everybody's starting to understand that. The reason our market structure is so valuable is because we can, if you're creative, if you're inventive, if you're smart, you can basically raise unlimited amounts of capital because we have this massive infrastructure. We have this massive market structure that allows you to exit and for people to be rewarded. That doesn't exist anywhere else in the world. You blow that, you've got nothing. You lose job creation. You lose tons of businesses. You lose all that money flow.
You lose all of your equity value because equity value is implicitly has value because of the implication that it's liquid.
That's right.
As soon as I tell you your equity is illiquid, you lose a shocking amount of your equity value immediately.
Somebody
just on the absence of liquidity.
Somebody wrote me an email this morning. They said, "What makes markets efficient?" And I thought it was an interesting question because I'm like, market efficiency is just it's just based on liquidity. As long as the more liquid, the tighter the markets are, the more efficient the markets are. You take that out, we're nothing.
No, then you're Russia.
Yeah, you saw what happened
As
in Russia.
a market.
Yeah. I mean, Russia's
the market is a non-functional shithole. Excuse my language. Sorry for my
no. The market in Russia is non-functional, and the market in lots of places is non-functional because as soon as the liquidity dries up, it is non-functional.
There's no integrity because there's no contract integrity. There's no counterparty, et cetera, et cetera, et cetera. And it depends if you're friends with the big guy.
Exactly.
Whoever the big guy may be.
Exactly.